the annual deficits that we will have over the next 4 years of Trump, the deficits are projected to be higher than what they would have been without this bill. So the deficits were going to go up anyway. But now because we passed this bill, they're going to go up even faster. And, the only cuts that the Republicans are making a big deal about are these Medicaid cuts and to the SNAP program. But they kick in 5 years. So they say, oh, look, we have all these cuts in years 5 through 10. Yeah, but they have no cuts in years 1 through 5. Those are the only years that count, because the cuts that are happening 5 years from now, they'll never actually happen, because there'll be another Congress before they kick in. And that other Congress is going to vote to prevent the cuts from happening. That's what happens all the time.
What if I told you this bill is a trap? Washington calls it historic, but it's debt in disguise. Deficits exploding, debt rising fast. Ordinary Americans pay the price. We've heard it all before. Grow our way out, lie. Now debt near $37 trillion, hole deeper than ever before. This isn't leadership, it's deception. Working families feel the pain.
I mean, if the Republicans really were serious about cutting Medicaid, they would cut it right now. They would just have the cuts, kick in right now in the first year. Just like the tax cuts, they're not saying, oh, we're going to cut your taxes 5 years from now. The tax cuts happen right away. They're retroactive to the beginning of the year. So, they're very quick to cut taxes, but they won't cut spending. So it's all gimmicks. It's all smoke and mirrors. When Donald Trump says this is the most significant bill we've ever passed, the only thing significant about the bill is how much it's going to increase the debt. But this is business as usual. This is the swamp. And as I said, when Trump was elected, when there was a lot of optimism about Doge and, oh, we're going to cut the deficit. And I said, no, we're not. It's going to be a repeat of Trump's first term. The debt went up under Trump, and now it's going to go up even more. And so this is a real disaster, for anybody who believed that, we were going to tackle the debt problem. And this is not a growth. The Republicans keep saying, oh, we're going to grow the economy with these tax cuts. No, we're not. We're just going to grow spending. We're going to grow the trade deficits, the budget deficits. It's more consumption. It is not investment-driven tax cuts where we're going to have more savings and investment. We're just going to have people spending their money. As far as I can remember, this idea that we're going to grow our way out of the deficits, they've been saying that since the beginning. I mean, going back to the Reagan years, we were supposed to grow our way out of the deficits. And every Republican politician who has advocated tax cuts has always claimed that they'd pay for themselves and that the growth would take care of the debt. Yet here we are, almost $37 trillion in debt. In fact, it's probably more than that, because I don't think the debt clock has been operating, since we've gone above the ceiling. So I think they're really hiding all the debt. So who the hell knows how much debt we actually have by now? But we never grow our way out of it. And even if the tax cuts result in more tax revenue, which they can do at times, but it's not nearly enough to offset the growth of spending that Republicans refuse to do anything about. I mean, the only time Republicans are against spending is when they can't do anything to stop it. So when the Republicans are in the minority in Congress and when the Democrats have the White House, yes, then the Republicans are against spending, right? When they have no ability to cut anything. But whenever they're in control of Congress, they're as big as spenders as the Democrats, and nobody wants to cut. There's like a couple of guys, right? You got Thomas Massey voted against it, and then one guy voted present, somebody, but that's it. Everyone else is a sellout. But if Trump had any integrity, if he actually cared about the country, he'd be vetoing the bill. He'd say, I'm not going to sign this nonsense. Give me a budget that reduces spending, because, all it is a candy. We're going to give $1,000 to these newborn babies. I mean, we're saddling these babies with debt. That's way worse than the $1,000 that we're going to give them. Why don't we do something about that? Or giving people, you could write off the interest if you buy a car. Why do we want to subsidize people to go out and buy cars they can't afford and take on a bigger car loans? We're telling our creditors, look, we don't give a damn about the debt. The debt's going to grow in perpetuity. At the same time, we're telling our international creditors that we don't even want to do business with you anymore because you're ripping us off. by having these trade surpluses, which is really what's supporting our economy. We live off of these deficits. Without these deficits, we have nothing. Our whole economy is based on consumer goods coming in from abroad because we don't have the capacity to produce them because we're spending all of our resources, just borrowing and consuming and making meme coins or whatever the hell we're doing. We're not producing things that we actually need. So we rely on the rest of the world to supply us what we can't produce, and they loan us the money to pay for it. And so I think we're really changing that dynamic. The world is waking up and they've had enough. And so I think they're going to be divesting of their US dollars and they're going to be trading more outside the United States. So I think the world will trade more, amongst themselves. I think a lot of countries that we have been importing goods from, I think a lot of those countries will start consuming more of what they produce as their currencies readjust. That is going to be what realigns global trading. It's going to be the exchange rates. So Americans get to consume a lot relative to what we produce because of the value of our currency. Our currencies exchange rate versus other currencies is what enables us to buy all this stuff. But when the dollar is marked down and all these other currencies go up, now our purchasing power transfers to other people and now they can afford to buy the stuff that we can't. And so instead of producing stuff and sending it here, they'll produce stuff and keep it. And that's a great deal for them because they get to keep their stuff and we get to keep our paper. We get to keep our inflation and our treasury bonds, right? That's what we're going to have a surplus of, and the world's going to have more goods to consume, and we're just going to have more inflation. The tariffs are going to be felt the most by the working class because, they're the ones that pay the tariffs when they buy goods and services or goods that are subject to tariffs, or when they can't buy the goods because they can't afford them with the tariffs. So it's working men and women that are going to feel the pain the most. Very wealthy people, they may not notice that the prices have gone up because it's not as significant to them. But people who are really, counting their pennies are going to really be impacted by the tariffs. But, the way to help the people is to unshackle the economy from government, free the economy of the burden of having to support government. And that means slashing government spending. That's the only way to really relieve the economy is by cutting government, because government is what's weighing the economy down. Now, there's also a lot of regulations that, tie people up with a lot of red tape that slow down progress, that slow down investment and job creation and things like that. So to the extent that we can reduce the scope and the size of government in its spending and in its regulating, that is the relief that the economy needs. There's too many people that are living off of government. And the people in Washington who care most about their own job. If you're in Congress and you're up for election every 2 years, the only way you keep your job is if you get reelected. And you need the votes of the people who are living off the government trough, the people who are getting all this money. And so none of these politicians want to take that money away because they're worried that it'll mean that they'll lose their job. And so we can't cut any spending based on the nature of the system that we have right now. So the spending is going to continue. Now, the politicians want to claim, we're going to cut your taxes because the taxpayers like to hear that they're going to have a tax cut. But the cost of government is not measured by taxation, but by spending, because every dime the government spends has to be drawn from the economy. The government doesn't produce anything. So if the government spends money, that's to take it out of the economy. Now, it can take it through taxation, but if it doesn't take it through taxation, it still takes it. It doesn't get it, for free. So where does the money come from if the government doesn't get it by taxation? Well, it's inflation. The Federal Reserve creates the money that the government spends. And so when we have a deficit of $2 or $3 trillion a year, that's $2 or $3 trillion of inflation. The government is spending that money into the economy. So people who get that money, now can spend it to buy stuff. And so the prices go up because the people who are getting government money aren't producing anything. They're just getting money and spending it. So they're just bidding up prices. And so when people go to the store and stuff is, 10% more expensive, 20% more expensive than it was, a year or two ago or whatever, that additional cost, that's your tax. That's what inflation is. It's just another way that the government pays for its spending is through inflation. So the big, beautiful bill is not a tax cut. It is a tax hike. But what it does is it substitutes one type of tax for another. So yes, the waiters who don't have to pay income taxes on their tips, the worker who doesn't have to pay a tax on his overtime, an income tax, they still have the payroll taxes. They didn't get rid of those. But all those people, yes, the government's going to put money in their right pocket, but then they're going to reach around and yank money out of their left pocket because yes, they're going to have more money to spend, but everything they buy is going to cost more as a result of the deficits that were created by the tax cuts. And so at the end of the day, they may be worse off because if you're going to judge by their standard of living, I earned more money, but at the end of the day, I bought less stuff with the money I earned because prices went up by more than my paycheck, right? Then they're losing ground. But, the politicians take credit for the tax cuts, but they don't accept responsibility for the inflation. Right. What do they do with the inflation? They blame it on the greedy capitalists. They blame it on price gougers, right? So they never accept responsibility for inflation, but all inflation is made in Washington. The government makes it, not the free market. I think that QE is going to come when the bond market, I guess to use Trump's words, really gets yippy. I mean, it's about the same because we had gotten to about 4.5 on the 10-year and about 5 on the 30-year. And so that's about where we are. But those are still low rates. They're not as low as they were. But if you go back, since the end of the Second World War, those are still low rates that we've got. Yeah, we should have higher rates. When, the more debt you have, if somebody goes to borrow money and they don't have a lot of debt and you go to a bank or a lender and, you've got a pretty good personal balance sheet and you want to borrow money, you'll get a certain rate. But if somebody else comes and they're loaded up with debt and they want to borrow money, they're going to pay a higher rate because they're a greater risk. They have a lot of debt. So that means that they may not be able to pay it back.
Deficits were set to rise. This bill makes them rise faster. Cuts delayed 5 years ahead. Congress cancels them every time. But tax cuts happen immediately. Politics convenient. Reform non-existent. Same promises since Reagan years. Tax cuts never pay themselves. Debt keeps rising without end, even if revenue grows. Washington always spends even more. America lives on cheap imports and artificially low interest rates. What happens when creditors leave? Dollar falls, purchasing power fades. Goods stay abroad, not here. Americans left with inflation, debt. Tariffs sold as pro-worker, but families bear the cost. Government cost is spending itself. Every dollar must be drained. If not through taxes, inflation, Fed prints trillions for deficits. Prices rise across the board. Workers lose more than they gain. Inflation is hidden taxation. Foreigners dumping U.S. assets now. Stocks, bonds, dollars being sold. Rates rise. Economy slows down. Fed panics into QE, printing money to buy bonds. But printing sparks even more. A vicious self-feeding cycle begins. Risk grows of hyperinflation collapse.
So you don't want to loan money to somebody who's already broke. You want to loan some money to somebody who can pay you back, easily. And so we're broke right now. We have trillions and trillions of debt, yet we still have interest rates as if we were, solvent, which we're not. But I think that the position we're in now is that if the Fed cuts rates again, long rates are going to rise again, just like they did before. The Fed cut rates to about 100 basis points, but then long-term rates rose 100 basis points. So the long-term rates did the opposite of what the Fed wanted. I think that if the Fed goes back to rate cuts, long end is going to go up. And that's going to be because the bond market is going to be worried about the inflationary impact of those rate cuts and the impact that it's going to have on the dollar, because a lot of the holders of our debt are foreign. And so when they look at our debt, they don't look at it from the prism of a dollar. They look at it from their own currency. And so if you're European and you've got money in U.S. treasuries and you're getting 4 or 5%, but you're a euro-based investor and you think, well, the dollar could drop another 10 or 20% this year in terms of euros, why would you want to just hold those treasuries? You're just going to lose a lot of euros holding treasuries. And so I think you're going to see more selling in the bond market as the dollar goes down. In fact, what you're seeing now is foreigners are selling all their U.S. assets. They're selling their U.S. stocks, their U.S. bonds, their U.S. dollars. U.S. stock market's been overvalued for a long, long time now. And now finally people are starting to notice how how expensive our stocks are. And now that the dollar is falling, it makes it even riskier for foreigners to own those stocks, but particularly the bonds. Because at least with a stock, you can say, well, the stock could grow and their earnings can grow. And so even if the dollar is going to drop 5 or 10%, I can still make more if the stock grows by 20 or 30%. But when you're buying a bond where the most you can get is the coupon and the coupon's 4 or 5%, there's no way to offset the foreign exchange loss. So when the bonds really start to get hit and interest rates rise, and if we start to see especially a big upturn in unemployment, right? So now the economy is weakening and interest rates are rising. Even if inflation is rising, the Fed is going to go back to QE because it's going to be the only way that it can try to, lower those rates. Because rate cuts won't work. They're going to have to go into the market and buy the bonds that nobody wants. But the problem is, in order for the Fed to buy the bonds that nobody wants, it has to create the dollars that nobody wants to pay for them. And so the more money the Fed prints to buy bonds, the worse off bonds become as an investment, because now they're creating more inflation to buy bonds that people don't want because there's too much inflation. But now there's even more. So it becomes a self-perpetuating spiral. Yep. The more bonds the Fed buys, the more bonds the rest of the world wants to sell. And, if the Fed is just buying treasuries, well, what happens to the mortgage-backed security? So now they got to buy those. But what about corporate bonds? Are they going to start buying those? Municipal bonds? Because, interest rates are just going to spike. And our economy is based on two things. It's based on artificially low interest rates and cheap imports. And if prices are soaring because we can't import stuff cheap anymore, either because of tariffs or a weak dollar or a combination of both, and interest rates are soaring because we have so much debt and the rest of the world isn't willing to finance it, then our whole economy that was built on that foundation collapses. And then the risk is that the inflation runs out of control. And then you get into a hyperinflation scenario, which, is the worst of all possible outcomes.
Can America survive 4 years? Exploding deficits, endless gimmicks continue. Will tax cuts ever pay? Do tariffs protect or hurt? When will creditors finally leave? Drop your thoughts down below. I want to hear you. If this video helps, like, subscribe, and share it. Here we break truth down.